Hello, my dear students. Welcome to online accountancy class. Now we are in the chapter Dissolution of Partnership Form from the partnership unit, and this is the last chapter. Today we are going to consider like one numerical problem for this session. Now let's consider the problem. This is our problem. Mainly you have to pass the journal entries. Here required information. Pass journal entry for the following at the time of dissolution of a firm: sale of asset, payment of liabilities. Now before explaining that, just shortly I want to say regarding this chapter, like how to open mainly realization account. This is the prime account. Very simple. Here, like when revenue is there, that time cash or bank account debit we know, and in case of like sale of asset, generally we credit that respective asset, like sale of machine, bank account debit to machine. So here we will not consider the machine, we will take the help of that realization account. So bank will be debit, but instead of machine or furniture or whatever the asset being sold at the time of closing of the business, so that time realization will be credit. So here in this case it is a revenue, so bank debit and realization credit. If it is expenses, then just reverse realization debit and respective cash or bank credit. So that way, like we can remember that easy way. The when revenue generated, then bank debit, realization credit. When expenditure are going to make the payment, that time realization to cash or bank. So this simple two idea: inflow of cash and outflow of cash. When inflow is there, then bank account debit to realization, outflow then realization to bank. Now sometime some expenditure bear a particular partner, some expenditure personally want to pay a particular partner with agreement with the partnership firm. So that time instead of cash or bank, we have to consider that respective partner's capital account. Say for example, Mr. X is a partner who want to bear some sort of like realization expenses. So that time the firm cash outflow is not there at that moment. Later on that cash outflow will be there. So artificially you have to increase that partner's capital account. So that time here realization to cash or bank will not do. Will do that realization account debit to respective partner's capital account. Exactly in case of revenue, if revenue like generated that time bank debit, and if any property takeover, that time instead of bank or cash we will have to debit that respective partner's capital account. The simple logic. After that we will compare realization account credit and debit. If credit heavier then profit, if debit heavier then loss. So here that is not difficult. Like here it is simple way we can say, like it is very difficult to build a or to form a particular business, but it is easy to close down, it is easy to dissolve. So as that real fact is that easy to close down, so accounts also will be easy here in these cases, like only realization, not like other chapters so many lengthy procedure. Here in this cases main ledger, it is a realization ledger, and if you properly learn realization, then like it will be easy to maintain partners capital as well as cash account. And realization account also not difficult, it is also easy. Already I told that it is difficult to form a business, to create a new business, but it is easy to close the business any moment, anytime that can be closed. As that real fact is such, so in account procedure also same. Now we'll consider one by one. First one, that is sale of asset. Revenue generated, inflow of cash, bank account debit to realization account, will not credit asset. Payment of liability 10,000. So opposite, realization account debit to bank account. Now commission of 5% allowed to Mr. X, a partner, on the sale of asset. Like X is a partner who took responsibility to dispose of the asset. So therefore it is an expenditure, but it is not paid at that moment, it is just allowed. So you have to credit X capital account. Therefore, realization account debit to X capital account. Now here another way, like realization expenditure on the agreement with a particular partner. Amrit is a partner. So with the agreement with the partnership firm that Amrit will be paid rupees 10,000 only. Reimbursement means amount paid up to maximum 10,000, and how much expenditure on realization that have to bear. It may be more, it may be less. So if it is more, then Amrit will be loser. If it is less, then Amrit will be gainer. But here actual realization expense is 15,000. So in this case, Amrit is loser. Ultimately, from the firm viewpoint, the partnership firm will pay only 10,000. So exactly same way, realization account debit to Amrit capital account. It is just allowed at the moment. If it is created capital, so capital is increased. Ultimately, finally, when you make the payment to the respective partners, that time partners capital to cash and bank. So ultimately, cash outflow it is happened later on. At that moment, just will like charge the amount or allow the amount, and artificially capital will increase. So that on the basis of maximum amount we'll consider as per the terms and condition, and real expenditure which was there, which have to bear by that partner who took the responsibilities. Now next information, did an old customer whose account to be 6,000 was written off VAT in the previous year, but 60% amount was like recovered. He paid 60% amount. So we have to calculate 6,000 thereupon 60%. If you calculate the 6,000 at 60% is coming 3,600. So it is another way revenue generated. And logic already I told, when revenue generated, bank account debit, no need to calculate here to bad debt recovery or to whatever may be. Just bank account debit to realization. Very simple. Already I told, it is easy to close the business, difficult to start the business. So accounts also on that way, same way, parallelly going on, easy to pass the accounting entry here. So in this cases, revenue generated, bank account debit to realization, and net amount 6,000 into 60%, that is 3,600 scheme. Last asset dispose of, investment, book value rupees 10,000, but it was realized rupees 150%, means market value is higher. Market value is more than the book value. It is good sign, though the business is going to close, but firm generated more revenue, more income from the particular asset, that is investment. So you have to calculate 10,000 into 150%. I think it is coming 15,000, and just it will be same revenue generated entry or inflow of cash entry, bank account debit to realization account. So this way, that is the problem, and I gave the hints of solution. Let's see that what are the solution is there. The first solution, cash to realization. First question, sale of asset 50,000, and the answer is cash account debit or bank account debit to realization revenue. Realization account debit to cash or bank, that is for expenditure. The second question, payment of liability 10,000. So outflow of expenditure, the second entry. Realization to cash. Now next third entry, allowed commission relation to X capital 2,500, and maximum amount which was allowed. Once we can check that to transaction, realization expense amount was 15,000, but the agreement was that 10,000 will be reimbursed. So these two are entry here, allowed commission and realization expenses purposes. This 20 here, allowed commission, realization account debit 2,500 to X capital, allowed commission, and realization expenses as per agreement amount will consider realization account debit to Amrit capital account. Now next another last two transaction like bad debt recovery, cash account debit 6,000 there upon 60%, 3600, and last one investment being sold at 150%. So 10,000 there upon 150%, it is coming 15,000. It is revenue generated. So cash or bank account debit to realization account. So very simple, very easy. This chapter, nothing difficult. And here, like every year, question coming from this chapter. So I think so. This chapter will help a lot from this unit to score the marks. Now we are going to conclude this session. Thank you very much.